So thank you everyone for coming. A speech tonight is going to be given by our friend Tom here, Tom Levene. The title of Tom's speech is "What is the Federal Reserve? Why do we need to protest and abolish it?" I think most of us don't know a whole lot about what banks actually do. We might put our money in the bank and we take our money out of the bank. We might get some interest from the bank, or we pay back interest on a loan from the bank. But those are private. They're different from a Federal Reserve Bank. The Federal Reserve Bank and the banks that we go through are both private banks, but obviously we don't bank directly with the Federal Reserve Bank. We're going to find out how the Federal Reserve Banks work, maybe even which countries have and which countries don't have Federal Reserve Banks. Probably see instances where a country that has a Federal Reserve Bank is hurting from it, or instances where a country that doesn't have a Federal Reserve Bank is hurting from it. Instance where a country doesn't have a Federal Reserve Bank and is actually doing quite well. There's a lot of different variations that happen within the system. That's all I'm going to say, so I'll turn it over to Tom. Thanks. Oh wait, no, I'm going to say one more thing. Tom's going to speak for about 30 minutes, and after Tom speaks, then we're going to have a question and answer time. So when we get to the question and answer time, let's just save up all of your questions, and then when we get to the question and answer time, we'll try to start with raising our hands so we can make sure that everyone gets a chance, and Alex or I or Tom will call on you to ask a question so that everyone has a chance to ask at least one question. Okay, go ahead, Tom.
The great deception. Wherever there is money, there is usually deception. What is the Federal Reserve? Well, in this speech, we're going to find out that it's not what we think it is. Okay? Like with so many things today, appearances can be deceptive. For example, the Patriot Act sounds as if it's a bill that would help protect citizens' constitutional rights. But in fact, if we look closer at an act like the Patriot Act, we'll find that it's not patriotic to the citizens, and it doesn't help the American people. So, the history of the Federal Reserve. Well, it all started on an island called Jekyll Island, which is off Georgia. And on Jekyll Island, there's a clubhouse, and it's basically an island for the rich, the super rich and elite. And on that island, there's a clubhouse, and on that island door, in the clubhouse, you can see a plaque which says, "Here lies the Federal Reserve was conceived in this room." Now, this was a meeting of 7 of the most powerful and richest people in the world at the time. They were instructed to come in total secrecy. They were not allowed to use first names. They wore disguises, and one even brought a shotgun with him. He never used a gun in his life, but he was going to tell people who he was, that he's going hunting, bird hunting. So he's got a shotgun with duck hunting. They were not allowed to call each other by their last names. They could only use their first names. And they were not instructed to speak to each other. These people represented a quarter of the 25% of the entire wealth of the world at that time. The 7 people were Senator Nelson Aldrich, the chairman of the Monetary Commission, who was there to bring in new laws about the money system following some big financial collapses of banks in 1907. We have, he was also the father-in-law of John D. Rockefeller, and represented the Rockefeller family, who, as we know, are probably one of the most influential families in the world today. Abraham Andrews, the General Secretary of Banking. Frank Vanderlip, the president of the National City Bank of New York, at the time the biggest bank in the world. Henry Davison, the head of senior partner of JP Morgan. Charles Newton, president of the First National Bank of New York, again, the second largest bank in the world at the time. Benjamin Strong, the actual head of JP Morgan, and probably the most influential man, Paul Warburg. Paul Warburg represented the Rothschilds family in the UK, and his brother Max Warburg was the head of the same kind of system in Federal Reserve System in Germany and the Netherlands. He was also one of the richest people in the world. So later these people boasted about this meeting. And in the Saturday Evening Post on the 9th of February 1935, Frank Vanderlip himself said, "I do not feel," and he was one of the people who was there, "I do not feel this is any exaggeration to speak of our secret expedition to Jekyll Island as the occasion on which the actual conception to what eventually became the Federal Reserve System. We were told to leave our names behind us. We were told further to avoid dining together on the night of our departure. We were instructed to come one at a time to the railroad terminal of the Hudson, where we would be picked up. We addressed one another as Ben, Paul, Nelson, and Abe. On the theory we were always right, he became Wilbur, and I became Orville, after those two aviation pioneers, the Wright brothers. The servants and train crew may have known the identity of one or two of us, but not all. And it was the names of all printed together which would have made our mysterious journey significant in Washington, Wall Street, and in London. Discovery we knew simply must not happen. So, why the secrecy? Well, at the time, as there is today, there was great concern that too much wealth was being in the hands of too few people. They called it the money trust, and politicians at the time were campaigning on, we must break the grip of the money trust. If it had been known that the bill, which was meant to break the grip of the money trust, the Federal Reserve Act, was actually written by the very people in the money trust, there would have been outrage. People would have just said, no, we're not going to do it. So later, founders talked about their secret meeting, and Vanderlip, one of the seven, wrote in his book, in a magazine, if it were to be disclosed publicly that our particular group had got together and written a banking bill, that banking bill will have no chance whatsoever of passage by Congress. Why? Because the purpose of the bill was to break the grip of the money trust. But who was it written by? It was written by the money trust. It's like the fox building the hen house, the chicken house, and saying, look, I'm going to look after it. I'm in charge of security. Don't worry, everything's fine. Okay. It's just not going to happen. So, if you think about these members, if you look closely, you'll actually realise that they're competitors. They're in competition with each other. They want to rip each other's throats out. So why would they be meeting? Well, the time period it was set against is what historians call the cartel period. It's when big businesses had established themselves and were agreeing with each other not to take each other's business. So they say, look, I'll do France, you can do Germany. Which they were even sharing patents. And they were slowly and surely building monopolies. So you have these competitors in one room together, and their stated reason is to build a cartel, a banking cartel. John D. Rockefeller even says, competition is a sin. And So why the Federal Reserve System and the government? Well, like all cartels, if you can make something legal by law, like a banana cartel or an oil cartel, if you can make that legal, you have the protection of the government. Okay? So that will make their cartel stronger and stabilize their cartel. So the cartel agreement was passed by law as the Federal Reserve Act. So what is the purpose of the cartel? To further the objectives of the cartel, period. So the question is, well, you know, how did they get this bill through? I mean, people would, if they gave a license, basically the bill is that the end objective of the cartel is to control the money supply. So how did they get this bill through? Well, in the election of 1912, the Democratic Party won control of the White House and Congress. To the so-called Aldrich Bill for the establishment of a central bank. And they put it through as a bill that would revise the banking laws, that would provide relief from financial panics, from unemployment and from business depression, and would protect the public from the domination of what is called the money trust. So they were saying that we're going to protect you from the money trust, but actually it's the money trust who's designing it. Okay? And next, Vanderlei and Aldrich began to give speeches condemning the bill. They said, oh, this bill is terrible, it's going to ruin the banks, it's going to be terrible for the banks. You know, we're going to go under. And people would think, wow, if it's terrible for the banks, you know, it must be good for us, and we're going to support it. So, but they also financed grassroots study clubs, gave out leaflets, and handpicked professors and created new economic departments in universities to write glowing reports about how good the Federal Act is going to be and how it will benefit the people. And Wahlberg decided, he was the European guy, he decided to make a couple of changes. And he said, guys, I want you to put a provision in there to say that on no account has this group got the power to print money. And that was the whole purpose. The bankers wanted the power to print money. That was the whole purpose behind it. So why did they put that provision in? And he was famously said to them, relax fellas, our objective is to get the bill passed. We can fix it up later. And with that provision, that there was to be no printing of money, the bill was passed on December the 23rd, 1913, just before Christmas, where most of the congressmen were on holiday, and the bill was passed, and the private bankers were in Washington. And he was right, Wahlberg was right. In fact, the bill now has been amended 100 times, and they did fix it up later, that they do now have the power to print money. So why is that important, that they have the power to print money? Well, if you can print money, you can create money out of nothing. And that's pretty good if you're lending out money where an interest is charged. Because essentially, what are you getting? You're getting interest on nothing. So you're getting interest on nothing, and that's why it was a very important thing for these bankers. So the Federal Reserve is arguably the most powerful agency now in the US government. It's got sweeping new authorities to regulate any company whose failure could endanger the US economy and markets under the Obama's regular overall plan. As the LA Times reports, the government, in conjunction with the private Federal Reserve, could effectually have the clout to simply seize and take over a company if it wants. But are we allowed to audit the Fed? Are we allowed to see its records? No, we're not allowed to. But it's more powerful right now than Congress. So, we know it's a partnership between the banking cartel and the government, but how does it work? And why does the government agree to this? Well, I'm going to call it the David Blaine system. Do you know David Blaine, the magician? He can just make things appear. He'll be like, hey, what's this? What's that? And there's a card, or there's a pen, or something. He makes things appear out of nothing. Well, we can call this the David Blaine system. Politicians, governments, need money, and they get money traditionally through taxes. Now, if they run out of tax money, what they can do is they can go to the Federal Reserve, they go to the Treasury and say, I've got no more money. They go to the Federal Reserve, and the Federal Reserve has been waiting for them. They say, yes, hello, I know you've run out of money. How much money do you need? And the government will say, well, we want to spend this, and we also need to pay you back interest. So we're going to have this much to pay back interest, and we want more to spend for ourselves. And what does the Fed do? Or any central bank, whether it's in England, Germany, or where it is, they will write out a check. And electronically now, I guess it is, there will be just a number appear. And now the government has the money without needing to ask us for taxes. Because taxes are unpopular. And they worked out, from the it's been going on since 1693, with the first bank was the Bank of England. They worked out that you can only charge up to about 40%, 43% before people would just start saying no. And at that time they might get their heads chopped off, the kings or whatever. So the most important thing to realise is that when the Federal Reserve puts this new money into the system, it dilutes all of our money. So each NT dollar, each pound, each dollar, US dollar, is going to be worth slightly less depending on how much money is put in. Okay? So the government benefit by having a free money source supply. The Federal Reserve benefit by getting perpetual interest for nothing. They've created that money out of thin air. So what we see is that the Federal Reserve system is a deception. It's your good old-fashioned scam. It's just a scam is what it is. It's just a scam. It's not federal because it's not run by the government. It's a private bankers who've designed this in 1913. Reserve, the Federal Reserve System, it's not a reserve because there's no money, there is no reserves. There are no reserves. They bought some gold, sure, but there are no actual reserves. They actually don't even need to have a bank account, they just need a checkbook. Okay? There are no reserves. And it's not a system. This word system was carefully chosen because, remember, it's at a time where the money, they wanted to break the grip of the money trust. And a system with lots of different outlets, and there's about 12 outlets in the US in different cities, would have the appearance of diluting the power to different places. But this isn't the case either. So, Woodrow Wilson was the president at the time, and he was the bankers actually backed him, they gave him the money to get into power, but afterwards, after he realised what had happened, he unhappily wrote, "I am the most unhappy man. I have unwittingly ruined my country. A great industrial nation is controlled by a system of credit. Our system of credit is concentrated. The growth of the nation, therefore, and all of our activities are in the hands of a few men. We have come to be one of the worst ruled, one of the most completely controlled and dominated governments in the civilized world. No longer a government by free opinion, no longer a government by conviction and the vote of the majority, but a government by the opinion and duress of a small group of dominant men." And that's Woodrow Wilson on the Federal Reserve. But it gets worse. So you have the Federal Reserve, and they decide, they created a system called fractional reserve banking. To put it simply, fractional reserve banking is giving banks the opportunity to also create money out of nothing, therefore diluting our wealth. And banks now can loan up to 90% of what they have in reserves. Okay? So when a bank is giving you a loan, it probably doesn't have the money in its banks. Okay, it'll probably have 10% of what it, but it will ask you to sign on a dotted line. If you can't pay that loan back, it'll ask you to sign and say, you know, if you don't sign this, we'll take your car and your house. But does it have the money itself? No. So, moreover, when the Fed puts 1 trillion in, that can potentially be increased to 9 trillion, because you can increase the money supply by 9 trillion. Again, diluting your wealth and my wealth by 9 times. Is the money backed by anything? Well, in the past, money used to be backed by gold or silver. So if you look in up until 1971, America was on the gold standard, and England in the past as well was on the silver and gold standard. And this meant that you have to have the equivalent amount of gold in your account to represent the money. Now that's taken off, it doesn't happen anymore. So it's what's called a fiat currency. It's not backed by anything. And the system creates perpetual inflation and perpetual debt, I would claim. And what do we know about inflation? Well, if there's one thing you can remember from this talk, inflation is a tax. Because every money you have would be, when it's increasing the supply, will dilute your money. It's an unsaid tax. So when things go up and your salary stays the same, that's because someone's been pumping more fiat money into the supply. But the Fed and writers of the Fed may say to you, well, officially the Fed's activity is meant to stabilize the economy and to protect our citizens from financial disasters and to stop inflation. Well, that's what the official story is. A widely used economic textbook used in American schools by Paul Samuelson states, the Federal Reserve sprang from the panic of 1907 with its alarming epidemic of bank failures. The country was fed up once and for all with the anarchy of private banking collapsing. It's partly true that the solution is wrong. So let's have a look at the report card. Since the Fed's inception, it's presided over crashes in 1923, 1921, 1929, the Great Depression, as you know, recessions in 53, 57, 59 and 75, and 81, Black Monday in 87. Corporate and personal debt is greater than ever before. As we all know, the crash in 2007 and the recession is still going on. Interest on national debt right now in America alone is 14 trillion, and central banks in Europe are seeing debt problems throughout the EU. As we know, Greece, now Italy. Much of the US heavy industrial Federal Reserve's actions increased the severity of the Great Depression in the 1930s and late 2000. You know, they're not part of a solution, they're part of a problem. You know? So when I say to you, why should we protest against the Fed and not on Wall Street? Because the Fed were the group of people who allowed Wall Street to do what it does. Wall Street did not change the laws. They tried to, they tried to help change the laws, and they might have done that, but it was the Federal Reserve who changed the laws. And I give you an example of the Glass-Steagall Act, which was a law in 1913, and basically the Glass-Steagall Act stopped speculation by separating investment banks and commercial banks. And in 1999, Greenspan and his mob pushed to take this Glass-Steagall Act off, which meant that investment banks and corporate banks could merge together, systems could be merged, and money could be put here and there, and God knows what, different packages could be made, like the derivatives, and oversight and control of these by the agencies who were meant to control and oversee these was complicated and corrupt, I guess, as well. And so that's created the 2007 crash through derivatives. But who's gained? Of course, the Federal Reserve was one of the few organisations to gain from that crash. We're coming to the end now, but I guess the Federal Reserve and the people behind it also, they make money by lending governments money. Okay? So wars are very profitable for them, because governments like to spend a lot of money when they have a war. And who do they ask? Well, they go to the central banks. And the central banks magically, this money magically appears in their accounts. And the bankers will get perpetual interest on nothing. So this is great. So they will encourage wars. And they will encourage wars to carry on for as long as possible. And we can look at right back from World War I, the Lusitania. America was staunchly against joining the World War I. But what did it do? It put this boat, the Lusitania, into German waters. And even the Germans was warning the people, don't get on that boat because we'll blow it up if it comes in. But they deliberately put it in, and then the boat was blown up by Germans, and that was the excuse to get into the war. And the Rockefellers and Rothschilds made awful lots of money on that. The Vietnam War. The Americans were deliberately leaving the tactics wide open for the Viet Cong to see. So the war go on as long as possible, and the Fed can make, the people behind the Fed can make as much money as possible. So in conclusion, we should be protesting and standing outside our central banks. And it's not good enough to say, okay, we give it to the government. No, because the government will do the same thing. We just need to get rid of it and get a gold standard, or get something that's backed by something. You'll be interested to know that gold, if you buy an ounce of gold coin now and compare it to what you can buy in Roman times, the value's not changed. You know, the value's not changed. So for example, an ounce of gold in Roman times, you could buy a toga, a nice belt, and a pair of shoes, a pair of sandals. And now you can go and buy a nice suit, a nice belt, and a pair of shoes. It's not changed. So why is gold and silver going to go up? Well, because it's not that it's intrinsically going up, it's because the value of the dollar or whatever the currency is going down, so you need more of it. So you can protect yourself by buying gold and silver. So in conclusions, the banks behind the Federal Reserve is a private bank cartel. The banks get perpetual interest on money out of thin air. It's perpetual interest on nothing. Secondly, the government benefits because it doesn't need to raise taxes, but will ask for money from the Federal Reserve. And the tax you get and I get is, what do we get? We get inflation. And inflation, everybody, is a tax. Okay, so that's the end of my talk.
Thanks, Tom.